Hello, everyone. Mike and Corey here today on Wednesday. Exciting topics. It feels like for the last 3 weeks, tariffs, tariffs, tariffs. Last night in the speech, tariffs. Yesterday, tariffs. So that'll be one topic we'll cover today. Not necessarily on the good news side. It's caused a lot of market volatility. One thing on the good news side is when you see some market sell-offs, you usually see bond yields go down, which means that interest rates for houses go down. And so we're seeing weekly mortgage demand ramping up. That's good news if you are either buying a house or selling a house or refinancing a house. And then Corey's going to talk about the S&P 500 and some of the trends with that. So as I get started, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on AnkerstarWealth.com, and the opinions expressed are mine and Corey's alone. So I will start, and I know that, hey, we don't want to be political, but there are things politically that happen that impact the markets. And we're also not driven to say, boy, I only want things to happen that make the markets turn green, although I certainly prefer that they do. So when I was listening to the speech last night, not the State of the Union, but addressing addressing Congress, and listening to that speech, or that's what I'm paying attention to, things that are going to impact the markets. So the biggest one, and I'm going to share my screen, is tariffs. And as we know, that's been the hot topic, and we've heard anything from, in summary, 3 countries targeted: Mexico for 25%, Canada for 25%, China for 10%. And when it comes to tariffs, here's the thing. The United States is a net importer. We're a buyer. People in the United States consume. We buy and buy and buy. There's billions of people in China and India. There's not as many in the United States. We're not a net exporter. We're not sending, like when you look at the things that you buy, you see a lot of things that say made in China, made in India, made in Mexico. I don't see made in Canada at all, but anyways, you see a lot of things we're bringing in. The people in China are not looking down saying, wow, this was made in the United States. I mean, it'd probably be pretty rare. So when it comes to applying tariffs to incoming stuff, the United States has more leverage than these other countries, because the bottom line is we're putting it on the billions of dollars coming in, and when they put tariffs on us, they're putting it on the millions that they receive. So it really is leverage for the United States. That being said, that causes volatility, it causes disruption. The thing with tariffs generally is the prices are going to be passed on to the consumer anyways, so you're going to end up paying for it in the long run. So part of this is a lot of it's negotiation. And already today, we're seeing the Dow jump up by 500 points. You see the headline on my screen, because Trump's going to delay the auto tariff he talked to Trudeau, and he talked to Ford and GM and Stellantis. So he's already cutting deals. This is deal making. And when it comes to deal making, and I said this on Monday, it's going to get more painful before we actually get the deals done. And this happens all the time in negotiating. Do I want the markets to be volatile? Actually, I do, because it provides buying entry points for a lot of clients. And that's why we make more money when you're in the stock markets. Volatility is actually our friend. But do I want to see the markets go down? Of course I don't. I don't want to see them drop. I don't like that, and neither do you. So I'm just sharing this to know or explain that, and I attended one call today already on tariffs. I'm doing another one tomorrow. And there's always been I shouldn't say always, but there's been tariffs on the United States for a long time, and they're higher than the ones that we're putting on other people. However, since we don't export a lot, you don't really care. You don't really notice it. It's kind of like, so when Trump comes in and says, hey, we're going to do a reciprocal tariff, and that's what he kind of talking about, it's the reason why it's a big deal is because we haven't done it before. We've been kind of letting other countries get away with it because they're small fish and it's just a little bit of dollars and it keeps, a good relationship. Now Trump's starting to kind of say that's not really fair. We're going to do things back, but we're a big fish because we import a lot more dollars. That's why this is a big deal. It's going to continue to be in the news. When you see the different negotiations, a lot of it has to do with, and I'll scroll down here. I'll show you some more, but a lot of it, Trump's saying, hey, Mexico, Canada, stop the inflow of immigration slash fentanyl and drugs. You do your part of the border. We got our side of the border, and he's willing to bend on some of that. So it is very interesting to go through. I really think China ultimately is the target. However, just because you put tariffs on China and not Mexico, for example, China will supply through Mexico, so they can avoid the tariff. So that's why I think Mexico gets involved in this as well. So anyways, more on that. The good news is, and let's just look at the good news because I like saying good news. Hey, so look at the markets up in the green. Dow's up 500 points, S&P 1.13%, NASDAQ 1.4%. So that big sell-off that we had on Monday, we have not recovered all the way from our highs on the year. But the big sell-off on Monday, we're making quite a bit of headway to recover from. And, we'll see. Tomorrow it could be something else. And that's just a tariff delay. That is not taking it all out altogether. So, we'll be sending out additional information on tariffs. We do realize this is a big news topic and will continue to be for at least some time. Hey, so the markets went down. What is a benefit of the market going down? I'm going to show you the 10-year Treasury note, and you can see here, I'll put it year to date, and you can see here's the 10-year Treasury. Was it 4.8% yield down to 4.2? You can see it went down. If you are a saver with Treasuries, this isn't necessarily good news for you. But let's hope you're not sitting with a bunch of money in cash. But this would impact you. This is a 10-year Treasury, not a 1-year. But what this impacts the most is the mortgage rate, the 30-year mortgage rate. When this goes down, the 30-year mortgage goes down. So all of these people, you people, us people, all the people that are waiting to either sell their house and buy another one, or just buy a house to start, or to probably not a lot refinancing a house, but some, when this comes down, the interest rates come down. So this article came out earlier. It says, hey, the demand surged 20% higher last week. So I consider this good news. Yes, if you're sitting with a bunch of money in cash, this is not necessarily good news. But for everyone else, it is. So, and as this interest rate comes down, what happens is people that are sitting in cash get less return on their cash, and therefore maybe incentivized to put a little bit more into the market, of which we are all owners in that same market, and it can go up. So it's kind of like how things unwind a bit here. So anyways, Corey, thoughts, tariffs, interest rates?
I mean, by the time I could generate a thought, they'll probably have changed course again. So I think, you just ride it out. You make sure you own high quality assets that will be there far beyond the tariffs.
Yeah, and I will say that the delay of the auto tariff, it's a big deal because I've been in the automotive industry. It is just because your car is assembled in the United States, and it doesn't matter whether it's a Ford or a Honda. If it's assembled, because there's a Honda assembly plant in Ohio, and Trump mentioned one yesterday that's being built, I think, in Indiana. Is it what's American made? I don't know. I know that people think of Honda as not American, Ford is American, but all of these auto companies are getting parts from other countries. There's no car that's manufactured that is 100% American made, parts made in the United States, parts assembled in the United States. It's a lot of things coming together. So when you put a tariff on Mexico or Canada and they supply the part to the United States, now you got to pay 25%. The automotive company pays that 25%, which of course rolls into the price of the car so that when you buy it, the car costs more. So it's essentially you're paying the tariff. So that's why this is a big deal. And here's the other reason why is if I'm an automotive manufacturer and I'm buying these parts from Mexico, and I think, like 2 days ago, I'm thinking Trump's not really going to hold to this. I'll wait and buy my parts like I'll buy it 2 days from now, and look, you can see I already delayed it. I'm getting incentivized to wait. And what that does is cause supply disruption. So I'm saying, hey, don't send it to me on Monday because I got to pay 25% more. Now you can send it to me on Wednesday because I get the 25% is gone. That's another problem with tariffs jumping around. It causes supply disruption. So anyways, we're on this. We're paying attention to it. Hey, if there was a way to invest on this, and I mean, who knows? There may be some obscure stocks that are somehow when tariffs go up, they make money. I'm not familiar with what they are. I'm sure there's something out there. I wouldn't want to gamble in that thing because this thing can come and go, but it's really just causing volatility and hassle. So I hope it gets resolved. We want to work with our partners, our near shore and our friend, they call it also friend shore. So, offshoring, near shoring, friend shoring. We want to work with them, so anyways, with that, I'll turn it over to Corey. You can talk about the S&P 500.
Yeah, just so one of our favorite technical analysts here at Ankerstar Wealth is Ian McMillan from the Adaptive Select ETF, or just from the Adaptive Group. He shared this chart just showing how we had been in a really defined multi-year uptrend until February 2025. And in February 2025, we flirted with that uptrend that had been in place, kind of have broken below it a little bit, and will, have to do some price discovery from here. Does this mean much? Not really. What I take away from something like this is, because the market's going to be going through a little bit more price discovery than it had been prior to February 2025, things could be a little more choppy than they were before 2025. So things might have felt smoother in 2024, and now they aren't feeling as smooth. It seems a little more choppy. Last thing, some of those technical analysts were also mentioning that, hey, the dollar peaked in mid-January and has been in a pretty strong fall or decline since then, which is a tailwind for United States equities. It's better for exchange rates, better for international trade, etc. So this could become something you hear on TV as a tailwind for stocks moving higher. Again, probably going to be choppier, but anything, any feather we can put in our cap of something being a more bullish impact on U.S. equities, we'll take it. So that's really all I've got.
All right. And I can see Corey's getting decorations like his empty wall and empty bookshelf. Like
Yeah.
he now has graduated from college, or at least got his diploma framed.
Yeah, I got double on that. We got two of those.
All right. And
Well,
he's got more books and he's added green plants. So, this will be how you can tell the age of this show is, my wall's been kind of the same the whole time, but Corey's wall is filling in. So I'm tempted to tell people, like, send them a picture of themselves. You can put it on the wall, picture your clients. And just a little side note, Corey wasn't with us last year when we did our March Madness on stocks, but I talked to Steve about this the other day. and March Madness is coming up. I think the brackets may come out this weekend. So we'll get our stock March Madness brackets out there, and we'll start to give some updates on that too.
Hey, my Aggies took down the Auburn Tigers last night. It was a fun game.
There we go. There we go. So hey, I'm not sure if Ohio State will make the NCAA tournament for basketball. They're like on the bubble. So,
Ooh.
I'll root for all the Texas schools that I can, unless they play Ohio State. So that's it for today. We'll talk tomorrow. I'm sure tomorrow, there'll be more tariff news. I don't want to dwell on it, because that's all we would talk about every day. So, but stay tuned. We'll see where it all goes. Have a good one. Bye.